Hey everyone, welcome back to the show. Today I want to talk about something that happened on October 11th, 2025 that most people completely missed. $19 billion in crypto positions evaporated in minutes. I'm talking about one of those wild market liquidations where traders are panicking, exchanges are getting absolutely hammered with transaction requests, and everything's just chaos. And here's the thing. Most blockchains would have completely choked under that kind of pressure. Some have gone down entirely for way less stress than that. But Solana, it just kept humming along, processing somewhere between 6,000 and 10,000 transactions per second during the chaos. Fees stayed under a penny. Everything kept moving. And that right there is the story I want to tell you today. Because if you think all cryptocurrencies are basically the same thing, you're missing something really important. And I'm also going to explain how regular people are earning 6 to 7% annually just by holding this particular cryptocurrency. But first, let me give you an analogy that'll make all of this click. The railroad analogy. To understand what's happening with Solana, I want you to think about America's first railroad boom back in the 1800s. Picture this. It was absolute chaos. You had dozens of different companies, all laying their own tracks across the country. They were all doing the same basic thing, right? Moving goods and people from place to place. But some of these companies succeeded wildly, and others failed spectacularly. And when you look at which ones survived, they had three things going for them. First, they had the most trains actually running on their tracks. Second, they were the cheapest to use. And third, they were fast and reliable. A railroad that was expensive, slow, or constantly breaking down. It didn't last long. Didn't matter how revolutionary the idea was. Blockchains work exactly the same way. Bitcoin was the first railroad. It was revolutionary proof that the whole concept could work. Then Ethereum came along and added new capabilities, making blockchains programmable. Now Solana is the next generation. It's a network built from scratch to handle way more traffic, move faster, and cost less to use. And just like those railroads, what matters isn't the idea, it's the execution. How blockchains actually work. All right, so here's what trips up most people who are new to this stuff. Using any blockchain costs money. Just like boarding a train required buying a ticket back in the day, but you don't pay with dollars. You pay with that blockchain's native coin. For Solana, that fuel is called SOL, S-O-L. Think about those trains in the 1800s. They ran on coal. The more trains running, the more coal you needed. Today, trains use electricity and diesel. Blockchains are similar. The more activity happening on the network, the more of that native coin gets used as fuel. This fuel pays for all the computing power and energy needed to process those transactions. Bitcoin uses BTC. Ethereum uses ETH. Solana uses SOL. They're not interchangeable. They're not the same thing. Just like coal, diesel, and electricity aren't interchangeable. The validators. Now every railroad needs people maintaining the tracks, right? Managing switches, keeping trains running on schedule. On Solana, these people are called validators. Validators run really powerful computers that process transactions, verify everything's accurate, and keep the whole network secure and running smoothly. It's hard work. It requires serious equipment and technical knowledge. Kind of like how maintaining railroad infrastructure required specialized skills and tools back in the day. But here's the thing. Validators get paid for their work. They earn SOL continuously, all day long, every day. If a validator stays online and does their job well, they can earn around 6 to 7% a year on the SOL they've put into the network. This payment comes from two sources, transaction fees and also from new SOL that the network creates as it operates. The exact percentage fluctuates based on how much total SOL is staked across the network and various network conditions, but it's been pretty stable lately, in that 6 to 7% range. And here's where it gets interesting for regular people who aren't tech experts. You don't need to be a validator to earn this. How regular people get involved. So how do regular people get involved? Same way early investors jumped into the railroad boom, by buying the fuel that powers the system. You can buy SOL at a cryptocurrency exchange like Coinbase, Kraken, or Binance. Think of it like a marketplace where different blockchain fuels get bought and sold. Some people buy SOL because they actually need it to use apps that are built on Solana. Others buy it as an investment, betting that as more activity happens on Solana, demand for SOL will go up. It's kind of like buying coal right before the great expansion of the railways. You're betting all those new trains are going to need fuel. Staking your SOL. Okay, so once you own some SOL, you've got two options. Option 1, keep it in your wallet. This is like keeping cash in a safe. It's there when you need it, but it's not earning anything. You might do this if you're planning to use your SOL soon to pay for transactions or use apps on Solana. There are wallets like Phantom that make this pretty easy. Option 2. And this is where it gets interesting. You can stake it with a validator. Basically, you're delegating your SOL to a validator to help them operate. In return, you earn a piece of what they earn. Usually that's 6 to 7% per year, though like I mentioned, this can vary. The really important thing to understand is that your SOL never leaves your control. It's not like you're giving it to them. You can unstake it whenever you want, though there's usually a short waiting period before you get it back. It's like investing in the railroad company itself. Instead of just buying a train ticket, you're supporting the network and earning passive income while you do it. What actually runs on Solana? So you might be wondering, what actually runs on these rails? What's using all this capacity? Just like railroads enabled faster commerce and entirely new kinds of businesses, Solana's speed enables apps that feel like regular websites but have all the benefits of blockchain technology. You've got high-frequency trading happening on decentralized exchanges. Think of them like stock markets that no single company controls. NFT marketplaces like Magic Eden, where artists can sell digital art with instant transactions. Gaming platforms that run smoothly because players don't have to wait around for every single action to process. Even that viral meme coin craze that keeps making headlines, that runs largely on Solana because it's fast and cheap enough that people can trade small amounts without getting destroyed by fees. The railroad analogy really holds up here. Once you had fast, reliable, cheap transportation, all kinds of new businesses became possible that just couldn't exist before. Same thing's happening with blockchains. The actual numbers. All right, let me give you some actual numbers because this is where it gets wild. Remember those 3 things that determined which railroads won? Volume, cost, and reliability. Let's see how Solana stacks up. Volume first. Solana has proven it can handle over 100,000 transactions per second in real-world conditions. During that October 11th market liquidation I mentioned at the start, when $19 billion in positions got wiped out, Solana sustained 6 to 10,000 transactions per second without breaking a sweat. Compare that to Bitcoin, which does about 7 transactions per second. 7. Ethereum manages around 15 to 30. That's not just a little better. We're talking about a completely different league here. Now let's talk cost. A transaction on Solana typically costs under a penny, usually around 0.2 of a cent to 1 cent, depending on how busy the network is. Bitcoin transactions can run several dollars. Ethereum, it has charged $50 or more when it's really busy. If you're trying to send money to a friend or buy something digital, those fees matter a lot. And then reliability and speed. Solana transactions finish in under a second. Bitcoin takes 10 minutes to an hour. Ethereum takes a few minutes. When you're building apps that need to feel as snappy as a regular website, speed really matters. To put this all in perspective, Solana's pulling in about $2.85 billion in annual revenue as of late 2025. And here's the crazy part. It's growing 30 times faster than Ethereum did in its early days. The network has proven it can handle absolutely massive loads when it counts. The risks you need to know. Okay, but now I need to be completely straight with you about the risks here because crypto is volatile, like really volatile. Sol's price swings wildly. Some days it's up 20%, other days it's down just as much. Right now the price hovers around $196, but predictions for where it'll be by 2030 range from $300 all the way up to $1,300 or more. And honestly, nobody really knows. Solana has also had network hiccups in the past. Times when things slowed down or even stopped entirely. The teams fixed a lot of those issues, and that October 2025 stress test I keep mentioning showed how far they've come. But blockchain technology is still pretty young, and things can go wrong. So if you're thinking about buying Sol or staking it, and I'm not telling you to do either of those things, but if you are thinking about it, only invest what you can afford to lose. Do your own research. Don't just take my word for it or anyone else's. This is not investment advice. I'm literally just explaining how the technology works and what's happening in this space. The bigger picture. Here's the bottom line. Not all cryptocurrencies are the same. Just like not all railroad companies were the same, some blockchains were built for security above all else. That's Bitcoin. Some were built to be programmable and flexible. That's Ethereum. Solana was built for speed, scale, and keeping costs low. And here's what I think people miss. Multiple networks are probably going to succeed, each doing different things well. Just like we ended up with different transportation systems for different needs. We have cars, trains, planes, ships. They all coexist because they're good at different things. The question isn't whether blockchain technology will change how we move value and information around. That's already happening. The question is which networks will handle the most traffic, give users the best experience, and earn the trust of billions of people. We're still really early in this blockchain railroad boom. And whether you want to use apps built on Solana, earn passive income through staking, or just understand this technology, I think it's worth paying attention to. All right, that's it for today's episode. If you want to explore Solana yourself, you can buy SOL on exchanges like Coinbase or Kraken and set up a wallet with Phantom or Solflare to get started. Just remember what I said. Start small, learn as you go, and never invest more than you're willing to lose. Thanks for listening. I'll catch you in the next one.